Hi everyone, hope you're all doing well. Today we're going to talk about ARK Invest and Cathie Woods, who have been selling out and dumping their Workhorse position they currently have in their ETFs. So we're going to talk about this today. I've covered Workhorse a little bit over the channel over the last few months and kind of talk about some mistakes and ways to pick up on stocks that are going south before you get down on a position huge, like what's happened to Workhorse over the last few months. So if you could smash the like button if you're new here, make sure you click the red subscribe button. We are about 40 subs away from 10,000 subscribers, so if we could get there this week, it'd be absolutely amazing. It's going to be a close one, but I think we could do it. But we're going to talk about ARK Invest today, Cathie Woods, Workhorse. Now Workhorse is a stock that I've covered over the last kind of few months going, there's something wrong with this company, it's not looking great. And one of the big things, there's still been a lot of like workhorse bulls out there, and the big thing that they've kind of still played on is that, well, if it was such a terrible company, why is Cathie Woods still buying shares in this company? Why is she still buying it into the ETFs? And Cathie Woods and ARK Invest were still buying this company like a month ago, and then all of a sudden, probably with the ties of this growth stock correction we're kind of having, they've started dumping out of all their positions in Workhorse. Their position has dropped significantly. Kind of suggests as well, they probably, I think even on Friday they were selling some of the shares, and I think it's now like the smallest position in the ETF, and it also kind of looks like they're probably looking to get rid of their position completely. And I think the crazy thing about this as well is that ARK Invest actually took a 60% loss on this position. So today I'm going to kind of go through how to spot these sort of signs. For me, I've been making a lot of videos about Workhorse over the last kind of few months, and kind of been saying, look, there's a few red flags going on with this company. And today what we're going to do is kind of go over that and kind of see, these are key points to look out for that will avoid you making a 60% loss on a company and taking a big L like that. Because a big L like that can really set back your portfolio, I guess, rather than, the big thing, you want to make money in the stock market. Taking a massive loss like this, you have to then go make over 100% on another position just to get your money back from this bad decision, and we don't want to have too many of them. So yeah, a bit of a lesson learned here of looking out for things and things that go on with a company that kind of suggest, okay, this isn't great. So yeah, we'll do everything like that with Workhorse. It's a company I've covered for the last few months going, there's a lot of dodgy things going on with this company, and I think this was like the last bull case about this company, now kind of not happening anymore. So where did it all go wrong for Workhorse? Where did it all go wrong for ARK Invest? Well, the big thing to start with is the risk to reward point of view. When you're investing and gambling are very different. Gambling, you're just kind of like hoping for something to happen, whereas investing, you're trying to put the odds more in your favor. And there's a certain amount of risk there, but it's making sure that your reward is bigger than your risk, really. Now, when ARK Invest was or Workhorse was at a very cheap valuation, at the time they were linked very heavily with getting the United States Postal Service contract. The company back then was valued at below a 1 billion market cap company. And you're thinking, well, if it gets the United States Postal Service contract, that's going to bring in, nearly 10 billion in revenue. Company's worth under $1 billion. Okay, it's a little bit risky there that, something out of their control, that they're, kind of wanting this contract. But you're looking and thinking, okay, if they do get the contracts, it's looking pretty healthy. But the thing is then after that, the company then went from a valuation of under $1 billion up to a $3 billion valuation. And then you're thinking, okay, how much has this kind of got that priced into it? And then you had other things that went on with this company that was like, okay, the United States Postal Service contract keeps getting delayed and has been delayed for 2 years. How long is this going to go on for? And that kind of view was getting a little bit like, okay, how much of this is getting priced in, and if they don't get that, how much is it going to go wrong? And as well as that, you had to look at other points of the company going, okay, how much is this company actually relying on that possibility of getting the contract? Because I'm going to talk about like the management and the balance sheet a little bit later on, but the company itself, if you look at the company, when you looked into Workhorse as a company, you were looking at a company going, okay, the company is still struggling, like over the course of like a year, is still putting in like 6 vehicle deliveries for $1 billion company. And you're like, well, that's really poor. The revenue wasn't growing that much. It was still putting in revenue of, 250k revenue. And it was like the point of view of like, okay, you're buying $1 billion company, but if they don't get this contract, worst case scenario, what is the risk of this to us here as investors. And you think, well, they've got nothing. If they don't get the contracts, this company's screwed, because the other things they're working on just aren't happening. You know, they're not kind of ramping up the production, and they're not ramping up the amount of sales they're doing. And then you're also thinking, well, if they're struggling to ramp up this much, if they do land this contract, are they actually going to be able to scale up and do this contract? Because everything that kind of suggests is what's happening at the moment is it's just not working out. And you know, the targets of what they were going to produce through the year were getting less and less, and management were even struggling to meet their own targets. And you're looking at that and thinking, okay, you know, if worst case scenario, what happens to this company? You know, have we still got a decent company here? And you're like, well, not really, because they're not really performing on that point of view. So then you kind of think, well, how much is built on this one contract? And if they don't get the one contract, how much is this company going to be stuffed? And then you kind of think, well, this is definitely a high risk, high reward company. But quite often when you say them sort of things, people only hear high reward, don't hear high risk. And then what also happens as well is sometimes people forget, especially when we've had a bull market, is people put these high risk stocks as like, you know, biggest positions, you know, top positions, top 5 positions, where realistically, if you're buying a company that is at that sort of stage of a development, you know, a company like that should never be a big position in the portfolio. In fact, it should be the smallest position in the portfolio. And that's where a lot of things went wrong for Workhorse, is that the more the valuation went up and the more it was evidence that it was only a company based on getting a contract, and that contracts kind of were going a bit like, I'm not sure what's going on with this contract, and nothing else was developing with the company. It was very clear then that there was a lot of risk to this company, and people were forgetting about that risk. And one thing that I think other people kind of base this on is that, you know, buying because ARK Invest were buying the company. You know, this has always been one of my biggest things that I've always kind of thought about in a video about this, but I never have done, is that people kind of say, oh, ARK Invest are buying it, so it's a good company. You know, it's not necessarily true. You know, just because Cathie Woods, who I think has done a great job over the last few years and probably will carry on doing a great job, you know, every so often she's still going to, and ARK Invest is still going to pick some bad picks. You know, every so often everyone's going to have some picks that they pick that might go down a little bit, or don't play out how they're supposed to. Probably not as much as going down 60%, but there's going to be times where you're probably going to pick companies that go, oh, that kind of didn't work out, and you move on to the next one. And you know, if you invest in just because someone else is doing it, it's not guaranteed. You know, just because she managed to get Tesla that went up 1,000% a few years ago, and that kind of really helped her as a name, really, I guess, an ARK Invest. You know, you can't invest because of them, because they might, you know, the next 5 stocks might not be good stocks. And the thing is as well is you've also got to know your companies and have confidence in your company yourself, that if it goes down you can still buy it, or you can make decisions on your own. And quite often this is what I see that I kind of annoys me a little bit, because people go, oh, this is a good company, and another positive is that ARK Invest are buying it, and it's like, is it a positive though? You know, it's what happens if ARK Invest, the next 5 picks are going to be terrible. And you know, I've always said, like, when I buy into companies that ARK Invest do own, I never say like, oh, it's a great company because ARK Invest are buying it, because it's not true. Because you know, at times they'll pick, you know, bad companies, and this, you know, obviously this has been one of them. And if you're picking solely because someone else is picking, that's not going to help you as an investor and understand the company and help develop you as an investor if you just follow up someone else's picks. And what happens if it goes wrong? You know, what are you going to do? Blame them? They're not going to pay you out on your losses. You know, you have to make them decisions yourself. So that's definitely something that I think a few people, I saw it when I said that Workhorse was not a great company. You know, the previous few times I made videos on them, I had a few comments saying, oh, if it was such a bad company, why is Cathie Woods putting so much money into them? You know, and unfortunately, now I don't know what them people think right now, but clearly it hasn't worked out for them. Another thing, management. So the big thing to pick up on is management of company. You know, make sure that management are achieving what they set out to do and are doing what they're saying to do, and just make sure that they kind of like seem on it. You know, sometimes management don't have the company's best interest in, or the investors in the best interest of what will benefit them. And some of the red flags with management were that, you know, this company historically had a few accounts of some dodgy stuff previously, which I won't go too much into today. But the big thing for me is that, you know, what we saw here is that they were potentially in the running to get a multi-billion contract. But this company that was in the running to get a multi-billion contract was very busy doing like interviews, and the interviews they were doing weren't like CNBC interviews or anything for a multi-billion company. It was like videos on YouTube, like with, quite small channels. And I mean, how many other multi-billion companies do you see that have CEOs, CFOs doing multiple interviews on YouTube? And you're thinking, okay, you're in the running for $1 billion contract, you're $1 billion company, you're in the probably the biggest time as a company where you should be scaling up production, you should be getting ready in case you get a contract, you should be ready if you don't get a contract. And, scaling up that profitability and revenue, but instead of, you'd think they would be focused on that, but they're out there doing interviews on like really small YouTube channels. And let's not forget that Workhorse as well have a very shady history of previously, a few years ago, actually paying influencers to promote the company as well. And the company did nothing as well over the next kind of few years. All it did was allow shareholders in the company to sell out the company with the share price moving higher. And you kind of look to think, okay, is this kind of history repeating itself? And you're thinking, why are these, why is the company so focused on doing interviews when you'd think, how many other multi-billion dollar companies do you see doing in a massive part, of the company's stage, doing interviews on YouTube multiple times as well? And you're thinking, you've got to think, as you as an investor, if you've got your money in a company, you should be judging that management team. You should judge them, and you should judge them and go, if I put my money in your company and I have my hard-earned money invested, would you want your workers or the person you're invested into the company out there doing multiple interviews on YouTube? Or would you rather them having their head down, working hard, show the hard work through financial improvements, through contracts, wins? Should they have their head down, working hard, or should they be doing these interviews on YouTube? And that was one big thing about management, is that, that they just, what performance you were seeing come out of the company was very poor, and what they looked to be doing as well as selling a lot of shares on the inside, just wasn't a great combination. And that's why you've also got to keep on top of your company, make sure they are developing financially and meeting their promises they are doing, and you're happy with what that management's doing. And for me, I looked at that and thought, there's something wrong going on here with management. And the bad thing as well is, like, you look at this company and thinking they need to get a move on because the balance sheet's awful. You look at the financials weren't improving and they were burning through money. And just to top it off, you're buying a company here that had a horrible balance sheet that is just historically burnt through the cash and just has promises without delivering them. And you're thinking it's just going through this balance sheet more and more. And you're thinking at some point this is going to catch up with the company. And overall, like, with this company, there's so much going on with this company, but the one thing that was holding it together towards the end was that, ARK Invest and the Cathie Woods had shares in them, and then obviously they're offloading them now, and it's like, what's the company got left? And unfortunately, even a company like this has took a investment group like this has taken a 60% loss, and I'm sure probably other investors as well probably have taken a little bit of a loss on this company. And those are some key points to look out for when you're seeing a company and kind of like judging it and making, keeping on top of your investments. And those are some points that you can see where it's kind of going wrong. And also, balancing out that risk to reward, how much risk to reward there is there. Don't buy because someone else is buying. Make sure that management are delivering on what they are saying they should be doing. And make sure the management as well, you're impressed with their actions. If they're doing things you don't like, that's probably not something great. And also, companies with great balance sheets, if this company had a bit of a better balance sheet, then maybe it could stick it out a little bit more. But because management aren't delivering, because the losses are getting worse and it's burning through this balance sheet, it's quite ugly for the company, and it's actually getting towards like bankruptcy levels now. You got to question whether or not this company will be around much longer in the future as well. So hopefully that's kind of like some things about, a company that things went wrong. The company, a lot of investors probably would have lost money in this one if they're still holding shares. Some people might have made some good money on the run up, but that's kind of like balancing out, okay, how much am I paying up for? How much is priced in now? Do I take some profit? And that's why you've always got to judge your positions on, is the company performing, and as well on valuation. If you kind of invested in this below $1 billion valuation, went to 3 billion valuation and you're like, okay, there's a lot priced in now for just a contract, then, you know, that's obviously probably a question of, you know, whether the valuation gets too much and too much is priced in to sell out, and don't get FOMO and thinking, well, what happens if it goes up even more? You know, the big thing in the stock market is to make money and always be prepared for the worst, I guess. So hope you enjoyed it anyway. Smash the like button if you are new, make sure to subscribe, and I'll see you next video.